Good evening, traders. My name is Raul Rivera. I am the founder of the marketprofile.com. Today is December 12th, 2017. Let's get started with today's trading. Today was a pretty interesting day here. A little bit on the boring side, in anticipation of the Fed meeting tomorrow. Well, the Fed meeting's ongoing right now, but in anticipation of the results of the Fed meetings tomorrow, we're probably going to see interest rate hikes and things of that nature. I think that the market's priced it in, but we're just kind of in limbo waiting for something to happen. So let's take a look at the market profile here. Looking at the S&P 500, we definitely have a D followed by a P for the day, though we did manage to sell a little bit of the market towards the end of the day. I'm just going to go ahead and split the market right there. There we can see consolidation followed by a distribution higher. This is a D followed by a P. A consolidation followed by a trend to the upside, uptrending shape. Now we wanted to buy down here inside 58 and 59. We also wanted to buy inside 55, moving on to 56. And the reason we wanted to do that, based on value, once we split distributions from yesterday, the value area lows are very important pivot levels, and we wanted to buy at those areas. But unfortunately, the market didn't sell off enough for us to get into those areas. In terms of resistance, we're at brand new all-time highs. The market profile, we got to understand that it's a charting technique for locating value, and we locate value, which is support and resistance, based on trading activity. Since this is new all-time highs, we've never traded at these levels. There is no trading activity up here. So in theory, for market profile trader, there is no such thing as resistance above these levels, right? We're going to have to make it, and we're going to have to use that area probably at some other point in the future. Taking a look at the NASDAQ, I got it zoomed in here. Let me zoom out a little bit. Same exact plan, only looking for the long side, not the short side, simply because we're trading at new all-time highs. And yesterday's distributions provided a D, followed by a P, followed by a P. Today's distribution is more of a D-shaped distribution, so no need to really split volume and time. Yesterday's value area lows provided a really good trading opportunity. I got long the NASDAQ here. But not only that, not only did I just use the value area low, I also combined it with other software from our partners at goldenzonetrading.com. We got some really nice indicators here to pretty much see further confirmation. Here with the SD volume zones, we had an area of demand around this area at these levels, and it just so happens that this value area low support happens to be inside that supply. I keep messing up the words here. This value area support was inside the demand zone. And not only that, but we decided to take it a step further and convert time into range, and look at this market as a Renko, and use another software from Golden Zone Trading called the Golden Fibs, which uses Fibonacci confluence in order to plot support and resistance areas. Now, we can see there's many of them. I really like the ones just underneath support based on market profile, and the ones just above resistance on value area resistance. Okay. So we came in, we wanted that golden fib. We got that golden fib, 98.75 here. As you can see, we took our targets for a little better than 10 points, and 14 points, I believe, was the real number. Beautiful trade there in the NASDAQ. Let's move over to crude oil, and crude oil extended the range today. Surprisingly, this one's been in a little bit of a list I like to call the no trade list, because it's got a lot of headline risk, and crude oil has been behaving very very unstable, like ever since it's traded above 55. It loves to extend the ranges almost every single day. It loves to trend on almost any single day. And, today we had a trend reversal. We had consolidation for a few hours. We traded up and consolidated for most of the day, really. And then we decided to distribute lower on the open of the market during A period. Letter B followed by a letter B on a range extension. and that's okay, right? We can still trade the crude oil market, but we got to be smart about it, and we got to look for maybe smaller profit targets. This first area here, we found value area support right there. We can see market consolidated there. It's no coincidence that it decided to consolidate there versus here or here or here. And the reason is because of value area support. So the market was supported there by buyers briefly. The buyers weren't able to hold, and the sellers took over once again, and we can see that visually here through the cumulative tick volume. So we had a D followed by P followed by B. We wanted to buy this area. I was not able to get into it. I was a little late to this trade. It was good for about 20 plus ticks on from here to here. Next trade, this one I did take on this value area low. It lasted. It was good for about 6 ticks at its best. Pretty embarrassing, right? It didn't hold very well, and then we took a loss on this one of about 18 ticks. Comes out to about 1,800 since I was trading a 10 lot. And then right here we've had another nice little area of value, and this one was our redemption trade. We took this one 20 ticks at its best, and we made a little bit of a profit on that one. Next market here, we got the 30-year bond, and this one just absolutely wow, because I was a buyer. I was a buyer down here. So yesterday we created a D followed by a P followed by a B. Today yeah, let's split the distribution here. Let's see what kind of distribution we have. Should be a D followed by a B, and there you have it, D followed by a B. Not the most balanced one, but I'm sure I could split it a couple more times and see a more, yeah, let's do it. See a better view of the market. There we go. That looks a lot better. So D followed by a B followed by a B. Either way, we had support here that we had to go back in time to find, a value area level of support. It held fantastically. This one we took a look through the SD volume zones, and we figured, hey, we're in an area of demand, so this is a pretty good area to start buying the market, right on the support on the market profile. Take it a step further, we go over to the Renkos. We got a level of support here on the Fibonacci confluence line, so we started buying here at 52.09, and guess what? I sold at 52.09, right? I broke even for this trade. It was at least good for 3 ticks at its best. My first target was at 4 ticks. I was only looking to scalp it. And the reason was, look at this. Compare it to every other day we've seen here. This was the biggest selling day the institutions had in the 30-year in over a week. Tons and tons of sellers. Nothing really told me that the market was going to reverse by the time I took the trade, so I had to get out for break even. I said, you know what? If I let them take my target, but if they don't, I'm going to stop myself out of break even, because this is some serious selling. They're probably going to want to take it down to this next support, and we would have probably tried the trade down there again. But this time here in the 30-year, we didn't quite go ahead for that one. Let's take a look at the Dow. The Dow very strong today. D followed by a P, followed by a P. Okay, yesterday we consolidated for most of the session. Very boring. It wasn't until the last 30 minutes of the day. Okay, this is 4:30 to 5 p.m. Eastern time that we finally made some new highs. We created value here. We wanted to buy this area, this area. Again, all of this based on value, but the market didn't drop enough, so that was it right there for the Dow futures. Let's take a look at gold. And gold was an interesting one, but again, no trade on this one. We split distributions from yesterday. We got a D followed by a P, followed by a B, followed by a couple of nice little smaller Bs. We wanted to sell this area and this area again. As the market continues to move lower in anticipation of the Fed, I almost get the feeling like gold is going to rally. But the dollar is going to rally because they're going to raise interest rates. That's going to hurt gold because people are going to want to hold dollars instead of gold, right? Nobody's going to panic. If they're raising interest rates, it means that the economy must be good. Let's take a look here at some other contracts. Let's take a look at the DAX. This one we went over briefly yesterday. It opened at a perfect location. It didn't gap up or didn't gap down overnight. Came down to support. I have no trade on this one. This happened very early while I was asleep. Right, I begin my trading around 8 a.m. Eastern time every single day. 13,080. We talked about wanting to buy this level yesterday. Look at that, 13,080. Traded all the way to 13,170. Potential of 90 points plus. Beautiful trade there. Again, I had no position at all in the DAX. The Euro Stocks 50. This one, excuse me. This one was pretty nice. It came down to a potential, almost a level of support here, but just didn't quite make it down to as far as I wanted it to go. No trade on this one. Pretty decent day of trading, pretty balanced, very, very nice. A lot of resistance here. We could see almost kind of like a flat top haircut on the Euro Stocks 50 here. We go back here. Let's take a look at the British pound. The pound, this is a market that, we don't trade very often, but especially since the Fed is, coming up on Wednesday, all of these markets have just been pretty quiet. There hasn't really been much activity, but just so you guys can see, not a lot, cumulative tick volume, a few more sellers than buyers. That's about it. The yen continues its sell-off against the dollar. And today just sort of held in consolidation. I'm sure tomorrow for the FOMC, we're going to see this fall lower. We're going to see a lot of the currencies. At least that's my call on it. And I'm not going to have a position in it, okay? But my prediction is all these currencies against the dollar are going to fall, as the dollar is going to pretty much have a pretty decent rally to the upside. I don't think a lot of these markets are going to go crazy. Looking at the euro, this one I took a loser today in. The market came in, pretty much here at the end of the session. We have a D followed by a B. We can split that. Okay, there it is. D followed by a B. Yesterday we had mostly a D-shaped distribution, and on these 2 days we created support with value area lows here. That, of course, this first one happened in the overnight session. And it blew right through it on a range extension, so it didn't work out that well. And the second one actually held pretty well, and as you can see, the market consolidated around that area for most of the session. Now, I took a loser. I got out pretty much at the low. That was where my stop loss was. Maybe, just a little bit more loose policy on my stop loss, and I would have recovered and made a little bit of money on this trade. But, he said, not he said, she said, could have, would have, right? It is what it is. I took my stop, and an okay trading day. I pretty much broke even for the day thanks to the trades in the NASDAQ. I made a lot of money in the NASDAQ. I pretty much broke even in crude oil, and with the euro, just lost a little bit of the money that I made in the NASDAQ plus commissions here and there. I pretty much fell right back down to break even with a little bit in the red. But other than that, pretty decent day of trading. If you'd like to learn more, definitely visit us at www.themarketprofile.com and claim your 14-day free trial of the room and of the indicators. Hope to see you then. And as for that, I will see you guys tomorrow for the next video. Take care, everyone. Bye for now.